Hello, this is the U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 18th of August, 2014, and ending Friday, the 22nd. We are already clear of options expiration for the month of August. It came as early as it can come, which is on the 15th of the month. That was today, Friday's action. So that is out of the way. We have the rest of what is typically the slow month of August ahead of us. Typically, I'd put it out August on average, although lately it's been kind of negative on average the last 10, 15 years. On average over the last 100 years, it's been a positive month. And you can look here at the chart of the S&P. This is the futures chart, and you can see it's actually up so far this month after getting rolling over right at the end of July. We'll see where we close out the second half of the month. Volume has been light. We're going to talk about that in a minute. But overall, we've had this kind of upward bias while we're still operating under what I would consider to be a general sell signal from that 13 back at the beginning of July. We haven't really made it back to that red line yet. Obviously, we had a shakeout here a little bit, which we'll talk about on Friday on news that the tensions have heated up a bit between Ukraine and Russia when Ukraine bombed in a Russian convoy. It did shake the market on options expiration, which was unusual, but we'll see what that really leads to in terms of any move in the market. Here's a look at the Nasdaq side. This is the NDX. And you can see this is almost at new highs. So a new closing high. Actually, it was a closing high for the year right here on the NDX. So the NASDAQ side shaking that off. But the other thing to note is that you have hit the green static trend line of this 9-bar move down, which is sort of the target, just like we expect to hit the red one eventually on the ES. Here's we are on the NQs on the NASDAQ side. So we'll also take a look at the SOX index, which is trying to crawl back up. It was weak before everything else. And then here's the biotechs, which have come back strong, and this is interesting. This is a pretty nice cup and handle for me in general on the biotechs. The old saying, as go banks and biotechs, so goes the market, and we will see what happens there. But overall, kind of mixed signals out of the market. I think the ES is a little weaker, NASDAQ side a little stronger at the moment, and if the bios do break out, that's certainly going to help even further in that area. Let's take a moment and take a look at volume. I wanted to talk about this, and this is really an important factor that we look at in the markets. Look at this week, the dots that close out the volume. This week, except for the last day, Friday. Now, that's options expiration. That should have pretty big volume, and it doesn't. It's just better than the prior 4 days. 1.67 billion shares on the Nasdaq is not big volume. So that's really weak for an options expiration, especially when you consider we did get a push when the Ukraine and Russia kind of conflicted there. So that's a bad options expiration. And again, August is always the slowest month, so anything's it is what it is. Meanwhile, the 4 days prior this week, that is, look at that. You can't find 4 days that low anywhere near in a row. Really can't even find two in all the rest of the year. August is that vacation month when people travel, and it's really these two middle weeks, which was this last week. The big boys, they know that, and they know that options expiration was Friday. On top of it, they were gone the whole week. They'll still probably be gone most of this next week. The following week, by the way, I'll point out, is the last week of August, and that's leading into a very, very early Labor Day holiday here in the U.S. This year. Labor Day itself is actually on the 1st, September 1st. So we have a long weekend, not this coming weekend, but the one after, and that means, of course, that Friday is going to be dead, maybe Thursday. So August itself may be kind of burnt just in terms of volume. If volume stays like those 4 days there for the rest of the month, the next 10 trading days, that's going to really limit our opportunities. We're going to have to be really picky, trade more in the first 60 and 90 minutes and a lot less, if at all. After that, we'll just have to see how it plays out. But that is something you have to analyze in the market. Notice the blue line, and I wanted to point this out as well. The blue line is the 10-day moving average of volume in the market. And you can see if you go back to April and May, it was way up over that 1.8 billion shares per day on average. It was over 2 billion for the first 4 months of the year. Then it kind of dipped. Summer started early when you came into Memorial Weekend there in May. Kind of came back up late in June. You hit the 4th of July holiday, which has kind of skews the data because one of those days is a half day that took us, you can see the one dot at the bottom, less than 1 billion shares. That's just a half day. So it skews the data there for a bit. So that dip that you see, not just on that day, but a couple days later, is because that day is dragging that down. So if you really don't count that day, you're going to take it out of the data. Look where we're at right now. This is now the lowest point of the year for volume, and you have to go back a long ways to find the moving average of volume get down here near that 1.5. I mean, you don't see it a lot even over the last 5 years. So it's a really, really, really weak market in terms of activity. and that's typical of the summer, but this is certainly seems like an overdone one in terms of that. So let's keep that in mind and not get ourselves in any real trouble when there's nobody else around trading. All right. Let's take a look at the intra-week action here on the futures. This is the ES contract, and you can see the very end of last Friday. Monday, we let the gap up and a very flat session. We did really well on Monday, though. Tuesday, a flat opening. It was an okay trading day, nothing special. We did reach down and fill the gap from Monday. Wednesday, a small gap up that has not yet filled. This was the options unraveling day. We started to pull back to fill the gap, and then at the 1 hour mark, we curled back up and pushed up a little bit and held that. That was the options unraveling move where the big players closed out their options positions for the month. Thursday, dead flat, just absolutely horrid, bad volume, small gap up, and I mean, there's a slight drift, but the whole day is basically in a 6-point range on the ES. Friday, we got a gap up, and everything was flat for the first hour. You can see the 9-bar setup there completing, and then we tanked on that Ukrainian news, and that was it, and that pushed us lower, and then we recovered back to exactly even for the day, and right on the VWAP. So I would point out that I think if it hadn't been for that news, at best we might have made it back to fill the gap and closed here anyways. Might not even have done that. So I mean, the news really is the only thing that created the movement there on Friday. Here's a look at the Nasdaq futures. I'm not going to go through the daily charts of some of our leading stocks because nothing really did anything this week. But here's a look at the Nasdaq futures. Slightly bigger upward bias for the week, approaching that 4,000 level again. Did the same general thing. Gap up Monday, flat. Tuesday filled a gap from Monday. Wednesday left a gap. Thursday, look how narrow those bars get on Thursday. There's just nobody trading. All the pros are gone by the end of Wednesday. All the big money players, and then Friday again only because of the news. So that's the way we look at the markets, and so hopefully, here's what we look at in the week ahead. First of all, here's data for the week. Monday, we've got the JOLTS job openings data. Nope, I'm sorry. That is incorrect. We are on the wrong week. Jump ahead here. There you go. Monday, we've got the NAHB Housing Market Index at 10 a.m., 30 minutes into the market. It's a non-event. Tuesday, CPI and housing starts and building permits. That can get the market moving a bit. Wednesday, the MBA Mortgage Index, no big deal. Crude oil inventories, the minutes of the last Fed meeting. Thursday, initial and continuing jobless claims. That's the weekly data, not the big unemployment data. Existing home sales, Philly Fed, leading indicators. That's a lot of data Thursday. What do we expect for the week? If anything, it's going to be like usual. The retail days would be Monday and Friday. First day of a new option cycle tends to be a little slow unless there's some news over the weekend out of Russia and the Ukraine that maybe gets the market going early. Monday's probably going to be a little light, and Friday's probably going to be a little light. Summer Fridays always are. We have to keep in mind the volume number. We'll be watching it after 30 and 60 minutes each day to try to see if any of these days are showing signs of life, that we can expect a little bit to get a little more out of the market. But otherwise, you focus on Tuesday through Thursday, which is the institutional days. A lot of data there in the CPI to get you started, and Thursday, a lot of data. No data at all on Friday. So that's going to be our focal point of the week. Is just especially what do we get Tuesday morning? Is there signs of better volume Tuesday after the first hour of play? If we only end up at like 350 million shares on the Nasdaq after the first hour on Tuesday, it's going to mean this is going to look a lot like last week. The big players are still out, and as we teach, you're half of making money in the markets is not doing dumb things when you shouldn't, and not losing money when it's clear that the trading opportunities are lesser. So we'll be backing off and doing a lot less trading if that ends up being the case. The following week, like I said, still August and heading into that long weekend. September's when things start to pick up, and so we'll see how this all goes. Hopefully it's just like the last, 20 years or so when I've been trading. And we'll look at September through April as being the better trading months of the year. Either way, we'll be here making calls at tradesight. Charts as usual brought to you by eSignal. Hope you have a great trading week.